All right, welcome everybody. And I see that people are filing in, looking for seats, finding places to, to sit. Oh, that's great. So the market has shifted some. You may have heard about that. And so the approach, the dialogues that we have to have with buyers and marketing for buyers and how to get right now, having a motivated, qualified buyer is worth a lot, right? It used to be that it wasn't worth as much because there were so many offers, but now not as much. And so this is a good time to have conversations with, get commitments from, start working with qualified buyers, and to explain everything you ever wanted to know about any of that. We have Jody Hatano with Golden One Credit Union, a great loan agent. And so I'm going to let Jody take it from here.
Thank you, Mike. Hello, everyone. Nice to see you. I'll just go ahead and jump right in. Just give you a little bit of stats from this past about, say, 60 days or so in the market. Redfin's reported that 44% of homes that sold in July were in bidding wars. Now, I know we're all like, what? That's crazy. Things are slowed down. Well, yes, they have, but still bidding wars are happening just about half the time. But now the amount of bids is down, okay? So instead of 20 offers, now we're on average about 3.5 offers for each property. And that's reported by Redfin agents, okay? So they've reported that for July, basically saying that homes need to be reasonably priced if they want to sell quicker. Now we're seeing homes sit on the market 30 days, 60 days, 90 days. Why? Number one indicator of something not selling is price, right? Not condition, not anything, but price. If it's priced right, it's going to sell. Still seeing that sellers and listing agents are having a hard time still coming to terms with, that the sales price that you would have gotten last year is not the sales price you're going to get this year. The sooner that we all accept that, then the faster we can start rebounding here. There's definitely less supply and less demand right now. Interest rates have gone up, and that's kind of scared everybody. We know that. But as I say in my calls with you guys, I challenge you to get out there and change the narrative in your community, because interest rates are not going to go back down to where they were during the pandemic, right? We don't want another pandemic for that to happen. So we want the housing market to be at normal levels, okay? Typically, we want to see 3 to 6 months supply, and then that's our normal levels. That's where everything is just kind of going the way it's supposed to go. We're going to get there. It's still going to take a little bit of time, but let's get out there and change the narrative. But the way to do that, the best way to do that, of course, is your day-to-day conversations. But what I really want to do, and I've got some dates that I've got blocked off, and it's going to be a first come, first serve type of deal. I want us to do home buyer fairs, okay? In person, probably like on a Saturday, mid-morning, early afternoon, something like that. Something where we can get people out in person. I feel like you have such better synergy when you do that versus Zoom calls. I'm happy to do Zoom if you want to do Zoom, no problem at all. I won't say no to any of that. But I really would like to get on the books with some of you guys to do some home buyer fairs in person here coming up September and October. So if you're interested in doing that, please give me a call right after this call, and I can tell you the dates that I have blocked, and then we can go from there. Now, I will offer my Golden One office in downtown Campbell, would be free, of course, for us to use, and we could fit probably 25 to 30 people in there comfortably. We can bring in some, refreshments and things like that. I can have a home insurance agent show up and maybe talk just for a couple of minutes, no more than like 120 seconds, because, as Mike mentioned, they might tend to want to talk for a long time, but just to talk about what home insurance is when you're buying a house and that kind of thing, just to add a little bit more value to the overall feel of the fair. So give me a call if you're interested in that. Thursday is going to be an interesting day for us in the mortgage world, because that's when our July numbers for existing home sales comes out. So if it comes out early enough and I can hop on the call on Thursday and let you guys know what the reporting is on that, then I'm sure, Mike, if you wouldn't mind, I'll I'll give you that info on Thursday. So where interest rates, they're about the same as they were last week, about the same as they were the week before. They've come down a little bit. Golden 1 interest rates, we're in for 30-year fixed jumbo. We're probably 4.5 to 4.625 with a good FICO. Our 5-year ARM is 3.8, 7-year ARM is about 4.125, 10-year ARM is about 4.3, 4.5, maybe 4.25, depending on FICO. So our interest rates are very competitive, and we're still out here writing loans, and it's busy as far as we're concerned. I know that you guys might see something a little bit different in your neck of the woods, but please feel free to share. Give me a call after this if you ever want to talk about what I can do partner-wise to help you grow your business, what I can do to help you bring value to your clients. Now, with that said, I'm going to just briefly go over a few marketing pieces that we have. I've gone over some of this before, but I do have to reiterate that if you want to be a part of this and have me prepare these materials for you, I'm happy to do it. You do have to pay the company that we use to generate this marketing material. You do have to pay $20. That covers you for an entire year, and that's to maintain RESPA compliance, okay? That's my part. That's what I have to say to you, and then anything else, here we go. Okay, so let me move this around here. Okay. As you all know, well, just like Redfin and a lot of online fintech companies are rapidly entering the real estate and mortgage space, and what they're trying to do is basically save money or give money back to their client by maybe having everything's online and there's no brick and mortar shop, so they can give their money back, and that's fine if that's what they want to do and all of that. But a lot of us, we don't do that. Of course, lenders can't do that, but give money back unless it's a bona fide lender credit. But what we want to do is position you in the market. If you're not giving a rebate, how are you going to compete with the agent that is going to give a rebate? Okay, I've had people leave the real estate agent that referred them to me for another agent at the very last minute to get $5,000 credit from them. So that stinks, because you guys are putting a lot of work out there and all of that, and I don't want to see that happen. So how do we make it so that your client is not enticed by that kind of thing? Unless, of course, you're offering it, then no big deal. But one way to do that is to give them more things of value. Some co-branded marketing tools I have to offer, I think would give them a lot of information. It would educate them on the value of buying a home for the first time or for the 4th time, however many times it is. We really want to position ourselves as true advisors, not just an agent, not just someone who's going to negotiate a contract, and not just a loan officer who's going to throw out an interest rate and take it or leave it and then, whatever. I want to be a true advisor to my customers, my borrowers, so that I follow them from their first home purchase, or at least their first home purchase with me, through possibly refinancing. Maybe, their family and friends are going to be referred to me by them because they appreciated that I took more time with them and offered them more education than just 30-year fixed is 4.5, take it or leave it, call somebody else if you don't like my rate, that kind of thing. So I do a lot of time, or spend a lot of time, studying the market, studying trends, so that I can help educate my buyers, but also I want to help you guys have talking points so that when you're in, meeting someone, maybe you're at a party or something, they're like, oh, what do you do? I'm an agent. Oh, how's the market going? Well, how is it going? Do you know what to say? Do you know how to address those kind of questions? Do you know how to overcome objections if someone says, well, it's a horrible time to buy, and we don't know what's happening with the economy, we don't know this, we don't know that. There's a lot of fear mongering out there, of course, we all know that. Just open up your phone, read some headlines, and you get freaked out. But when you really dig deep into the details of the housing market, it is actually a pretty exciting time to be doing what we're doing. If any of you were at the presentation last week with Nora from Freddie Mac, I found it very inspirational. She gave a couple of quotes that I have used probably more than I should just in the last few days. I'll share them with you if you weren't at that meeting. Of course, as a loan officer, I get a lot of objection to interest rate. It doesn't matter. I mean, when we were in the environment where jumbo 30-year fixed was 2.75, of course, people complained that it wasn't 2.5, right? 2.75 30-year fixed. I mean, anybody would take that any day of the week, but I'm always going to get objections to any interest rate I give them, even if it is the lowest that they've seen, they're still going to want lower. So one thing that Nora said that I appreciated was, well, two things about the interest rate. One is you're married to the property, you're dating the interest rate. And I just thought that was really cool. I really enjoyed the way she put that. What I have been telling my borrowers this whole year is, yes, interest rates are higher. Of course they are. We all know that. We knew that was going to happen. I've been saying it to you guys at least for the past, well, now we're in August, so I'd say at least a year or so. I've been saying, 2022, we're going to have much higher interest rates, like the time to act is now. But guess what? A lot of people still didn't act, even at 2.75, even at 3%, then 3.25, then 3.375, still didn't pull the trigger on buying a house. So maybe they think they're hung up on interest rate, but I don't think they are. And that was another point that Nora made last week, was that when she gets people talking about interest rates and how high they are, she'll say, well, you still haven't bought a house, even when interest rates were the lowest they've ever been historically, ever, 2.75 on a 30-year fix. Did you buy a house then? Well, no. Okay, so it's really not about interest rate. It's just about the overall uncertainty of what it means to buy a home. And sometimes people, I think, feel maybe trapped, or, oh, well, if I'm renting, then, I can move at a moment's notice. And that's true, but you're not building equity that way. You're not building wealth, okay? You're not bridging the gap of generational inequity, right? So you want to be maybe the first time in your whole family's history that you're going to be a homeowner, and then you're starting to now encourage your other family members to do the same, right? I want to be a part of that. I want to be a part of something that life-changing for an entire community, not just one person, but the entire community. So I think doing the home buyer fairs will be a really exciting thing to help us all be able to be a part of that. So give me a call if you're interested after the call. Okay, so let me hit my next slide here. Okay, I talked about this last year. The 2022 fair market rent in California, you can go to rentdata.org and talk and show your own clients there what the average rent increase is for any given area in California. I mean, basically, average rents go up about 5% every year. You're either going to help someone put that money in a landlord's pocket or their pocket. So how do we help renters become homeowners? Well, for one thing with Golden One is we don't always verify rent. Now, of course, if someone's not paying their rent, we're probably going to know about that anyway, just based on, even a whole credit profile review and everything. But we don't verify rent for the most part. I'd like to do the home buyer fairs that's targeting apartment complexes. If somehow we can get in, if we cannot get into the apartment complex, typically they're not going to open the doors to wanting a mass exodus of renters, but, coffee shops and things, stores around apartment complexes are a good place to go advertise. Put flyers up, put some business cards up, things like that. We can do some mail outs. I've been wanting to do some joint YouTube videos. I've done it with a couple of you guys, but I want to see some consistency. So I want to see that, just like Mike does these calls every Tuesday and Thursday at 12:30, you're going to get something. Why not have you be the agent in your community that buyers know, well, it's Wednesday at 4:30. I'm going to pop on this, call or this YouTube channel or whatever and see this, something real brief, maybe 5-10 minutes. What's going on in my neck of the woods? Is it a good time to buy? What's new out there? What does this agent have to help me become a homeowner? Of course, utilizing social media is always important. Twitter, Facebook, LinkedIn. Let's get out there. Your phone's not going to magically ring, right? Mine doesn't magically ring. I don't just get random phone calls from people that typed in my number and they all of a sudden want to buy a house. it's all about getting out there in your community and being known, being looked at as the expert in your field. Who do people trust? Who do they want to call? Well, you've got to get out there and put your face in front of these people. And the best way, the easiest way to do it is going to be, I think, is going to be the home buyer fairs. I know that you guys maybe have even done, 500 of them like Mike. But really, what's the harm in it, right? Even if you just get one closing out of it, then financially you're already in the green. But you also have to feel good about the impact you're making in your community. And I would love to be a part of that. Okay, Mike has ability to do some targeting with mail outs. Mike, I didn't confirm this with you. I probably should have right before we talked. If you don't have access to this anymore, let me know, but I would assume you do. So he's got this really cool site that he can go to, and basically you can see on, for example, this one in 95124 down in Cambrian Park, San Jose. We've got 415 residential mail outs we could do. 2.8, I can't read that, I'm sorry. I can't see what that says, but it looks like, okay, if we can mail out 415 addresses, it's going to cost about $80. Now, I am very, very particular about being RESPA compliant, because I've seen other people in my industry get in trouble by not maintaining RESPA compliance. So we will have to split the cost of this, but what's, $40, you're investing in your career, and I think it's a good thing. Mike, were you going to say something?
Not unless I have to. That's
okay. I just thought
the
maybe
one
you would.
that I think you saw before, which this looks like, is every EDDM, which is every door direct mail with the post office. The good news about that is it is an inexpensive way of sending out postcards. The postage is like 20 cents or something like that. The downside is that it sends it to everybody in the carrier route, pretty much regardless of whether they're an owner or renter or whatever. However, it is possible, I've done this before, to get apartments and to also get people that are renting. And then if we sent it out using what's called ERCOLOT, which is extended carrier route pre-sort, that postage is like in the low 20s. And then it's targeted to people that are likely to be renters. But I can help with that part, right?
Okay.
If you guys are interested in marketing to people that would come to a home buyer fair, then that would let me know, because I could help you with how to get the right list to send it to so that it's targeted and gets the best results.
Awesome. Thank you so much. Okay. So some co-branded marketing that I have to offer. Again, this is the part where it's just $20 a year. Is the first piece, and this is one of my favorite pieces, is the real estate report card. Now, of course, this is just a sample, okay? Obviously, I'm not working in New Jersey, but this is just a sample. It's something that really helps people deep dive. And also, we are all about information these days, right? Everything, any piece of information on anything, maybe not always accurate, but it can be found by just going on your phone, right? So you've got to be able to give that kind of information to your clients. So when you meet a client for the first time, do you, prepare a folder or something to be able to give them that talks about the process, maybe something neighborhood specific, if there's a certain area they want to be in, maybe a little bit blurb about you, that kind of thing. These pieces would be really good to put in there and to give them. The real estate report card, it talks about median home price of, in example city here, this is somewhere county in New Jersey, median home price 386, 5-year gain 120,000. Obviously those numbers would be adjusted for California, but that's a really good bit of information to give them, where I mean, even if you said, hey, in 5 years you can have $120,000 in equity, where are you going to go invest money and get that kind of return? Real estate investing, even owner occupied, okay, I'm not talking about just real estate investors, but it's really the best way to build wealth in our country. And this is something that will help people understand that and put numbers right to the areas they want to be in. Piece number 2 is appreciation data. It's going to give them up to 9 years of appreciation so they can see, and it's conservative, okay? So I can change the numbers if I wanted to, but I don't. I usually leave it to whatever the system is going to calculate is the most conservative appreciation level, because obviously we're never going to say to people, you definitely will gain appreciation by buying real estate. We can't say that because we don't know. But if you look at trends over the last many decades, even through the housing crisis, okay, of 12, 13 years ago, things have rebounded, and we're not going to see that kind of thing happen again, because lending is a completely different environment now. And I think Nora mentioned last Thursday that Americans are sitting on about $60 trillion in equity. So we're not going to see a mass exodus and foreclosures and things like that. That's for another call if you guys want to talk about that. If you still have people out there in the market talking about real estate crash, it's not going to happen. Anyway, okay, so appreciation data, that's one piece. Cost of waiting, this is another favorite of mine, because it says to people, okay, that's fine if you're not ready now to buy, but what's going to happen 2 years from now? Real estate's not going to get any cheaper, okay? Interest rates are going to do whatever interest rates do. There's no way that we can control that. Now, at the same time, Fed increased rates a couple weeks ago, mortgage rates went down. They actually, mortgage bonds liked that information. They liked the Fed increasing. The housing market has definitely slowed down quite a bit, and things are getting a little bit more under control. So this is a good piece of material to offer your clients, the cost of waiting. If you want to wait a year, this is how much equity you won't have, and this is how much more expensive the houses are going to be. So this, giving them this information where they can see it and kind of do they can put the math in their head really easily and not just guessing numbers, is really nice. It's a nice visual. This is just the same thing, cost of waiting, just a different chart. Buy versus rent. I think I just mentioned rent typically goes up about 5% every year. A little higher or lower depending on where in the country you are, but in California, definitely about 5%. This is going to give information to your potential client that says, if you don't buy and you continue to rent year over year, your rent's going to go up about 5%. About the 4 or 5 year mark, you're going to be paying the same as you would the mortgage that you could potentially have right now, and you'd have 5 years of equity, 5 years of appreciation. So when you put it that way, and then you say, all right, well, net gain, for example, on this particular one, net gain is $231,000. I would definitely, after 5 years, would like to walk away from wherever I lived with a check for $231,000 versus paying movers to move me out, and then I'll walk away with nothing except my security deposit back. I mean, when you put it that way, hopefully it can help people understand a little bit more that, buying a home is a very good investment, even now. Bid over ask. This was something that we did a lot of here the last year, not in 2022 so much, but in 2021 and 2020, where people were paying a lot of money over the asking price. But that's when we were seeing, every property was in a bidding war, and it was 20 offers, 30 offers, and $200,000, $300,000 over. I think you guys probably remember the house in Berkeley that went $1 million over asking. We're not seeing that anymore, but with this on average 3.5 offers per property, maybe they do have to offer maybe 10,000 or 15,000 or so more to win the contract. If you run into that kind of scenario, it does not take me long. I can pop in with a little bit of data from you, location, where the property is. I don't even have to have the address, but just maybe the county is always best. Put the information in, and then you can give them a 5-year forecasted appreciation. As you can see, this one was a 6% increase for Santa Clara County on average. So their bid over ask, they paid $50,000 more. They broke even at 6 months in. Okay, so what's your $50,000 that you paid over got you $406,000 in equity. So when you put it that way, it kind of is a little bit easier for people to swallow. Little home appreciation chart if you liked more of the visuals versus a bunch of verbiage. This is pretty good. This again can be property specific. Strategies to overcome bid over, you know what, I'm not even going to go on this slide because we've got a couple of things that have changed since I wrote this one. And this is not something we're seeing a lot of, so I'm going to pass on that one right now. Bridge HELOC, I do want to talk about this because it is something that we're doing and actually doing a lot of right now. So we have a bridge HELOC that we are offering. It is for borrowers who haven't sold yet or are not going to sell yet their currently owner-occupied property, but they're going to buy a new one and all their equity is tied up in the one they want to depart. So what we allow is up to $500,000 home equity line of credit that they can go ahead and pull and put down on the new home. And if you think about the purchase price that we're in, you know, on average where we are, that's more than enough for 20% down for the most part, especially you guys down in Orange County. Your average home prices are what, 800,000-900,000 or so. They wouldn't even need that much. There's no prepayment penalty on these. There is a early close feature that they would have to pay, and basically it just reimburses us for the processing and underwriting of the home equity if they end up selling their house within 3 years. If they don't sell the house within 3 years, and this ends up just being an interest-only loan for 10 years, the draw period for 10 years, it's utilized just the same as a home equity line of, like a regular home equity line of credit. It is priced as investment property because remember, they're leaving this property, buying a new owner-occupied property. So they're going to pay a little bit higher interest rate on the bridge loan. But if they don't have to cash out any of their stocks, you know, stocks are down a little bit, they don't want to cash out any of their stocks, create a taxable event, this is still going to be the way to go. All right. And it's an interest-only payment, so it is still cash flow-wise a lot less. Let's see. It's not required to be paid off. It can be a 30-year loan, so they could end up holding on to it. They could refinance it if they wanted, really anything they want to do with this. But I'm really excited about this, especially given where the stock market has gone this year. And I see it every day in people's retirement statements, even their 401ks, their IRAs, and their just overall investment portfolio, where they've lost, you know, a lot of money with the stock market going down. So to keep from having to touch that, we can utilize the bridge HELOC. Same thing I just talked about. We do actually offer HELOCs on second home, primary, and investment property, if anyone's interested. 640 FICO, up to $500,000. Golden One is very lenient on residency and visa status. I've had this question a lot in the last 2 weeks, so I wanted to just keep this in my presentation for today, just to put it in the back of your mind in case you run into somebody here in the next foreseeable future, or you had someone recently that wasn't able to qualify with another lender, a traditional lender, some sort, big bank or something. We are pretty lenient on that. So give me a call if you have that scenario. Jumbo and super jumbo. You know, I won't spend too much time on this because I think that a lot of us on this call, we're kind of all over the place in California, not necessarily right in the Bay Area. But we do go up to 5 million. If you guys have that scenario, we can go over that if we have compensating factors. I can do interest only up to 2 million, which is a really nice feature. It's really great for self-employed borrowers or people that are commissioned, like real estate agents and loan officers. You know, maybe your cash flow is kind of ebbs and flows with the market. You know, summertime, fall, spring, that's always our busy season. Not as many people want to buy a house in the wintertime, in December and January, so that tends to be slower. So having an interest-only feature on your loan can be really beneficial for that. You can still make a principal and interest payment if you'd like. There's no prepayment penalty on it, but it is a nice feature to have. I can do 20% down up to 3 million, and I only need a 700 FICO for that. And investment property, I can go up to 1 million. So just giving you guys a little bit of info. Gift funds allowed, of course. For jumbo loans, typically you have to have your first 5%, but then the rest can be gift. Unless someone's gifting you a full 20%, then all of it can be a gift. So yeah, so just keep that in the back of your head. Okay. Last thing here I'll talk about is in this environment that we're in, where everybody's focused on interest rate, you know, they've gone up so much and all this. when I'm talking with your clients that you refer to me, I try to help them understand that while that is very important, that interest rate is a very important part of the whole process, and it is what you're going to be paying. It's what your payment's based on for the life of your loan or however long you're in the house. The most important question, though, is not what's your interest rate. It's, do I qualify for this loan? Do I even qualify to buy a house? I recently had someone who I had not gotten their application in yet. They did not submit it. I'd never given them an approval letter or anything like that. They ended up going under contract. Have no idea how the seller took it without a letter, but they did, and then they ended up not qualifying. It was really sad, but that's why I really stress to you guys to please let me pre-qualify, or actually take it past pre-qualification to pre-approval, and even on to conditional approval if their situation warrants that kind of underwriting up front. So basically, I want to talk about, let's make sure you can get the loan first. All right, let's make sure you're approved. And then we can talk about an interest rate. Interest rates are not going to vary. You're not going to get 4.5% with me and 6% with somebody else for the most part. I mean, we're all going to be pretty close. But what else can I do to help ease the process and make things a lot smoother and position you as a buyer to be more competitive? I can do that by going ahead and underwriting the loan. I know in the 2022 California purchase and sale agreements, there's a box where you're supposed to mark if the loan's been underwritten or just pre-qualified. I see more often than not that the marks are that it has not been underwritten, and all that happens is a listing agent calls me and wants me to give them a whole lot of information, which I don't typically do because of privacy, consumer privacy concerns. But if we can go ahead and have it underwritten, it takes a day or two for us. If it's someone that's self-employed or commission only, or maybe they have restricted stock unit income, that kind of thing, let's go ahead and take a look at it. Make sure they can get the loan, and then we can talk about interest rates. Again, change the narrative, right? It's not just, even as a client comes to you and says, oh, maybe you haven't really had more than 10-minute conversation, they already want to know how much money you're going to give them out of your commission check to help them buy. Well, we want to control that conversation, because that's not the most important thing. What's most important is, are you qualified? If you're not, then this whole conversation is a waste of time. When someone calls me and says, oh yeah, I'm starting to look and maybe I'm going to buy in about 6 months, but what's your interest rate? I'm trying to decide on a lender right now. Well, what is the interest rate? I don't know, because I don't have your application, I don't have your credit score, I don't know what your loan amount is, and so I have to dig a lot deeper to get to the point where I can even give somebody an interest rate quote, and it's probably not going to be the same interest rate they get when they actually have a contract. So another reason to change the narrative and focus on what's most important in the transaction is, do you qualify? So with your guys' support, when you refer someone to me, I appreciate always when you encourage them to comply with requests from underwriting, that there's certain documentation that we need and things like that. It always helps make my job a lot easier, and in turn it makes it a better experience for your client overall. They don't get upset or anything. They're like, oh well, Joe told me that Jody was going to ask for this, so here it is. That's about all I have. If you guys are into doing the fairs, give me a call after this. Like I said, I've got some dates that I've blocked off in the next September through October. I'm happy to do them on Saturdays. I'm happy to do them Zoom. Whatever I can do to help you guys close more loans and basically be a positive force in your community, I'm happy to be a part of. Thank you. Turn it back over to you, Mike.
All right. Well, not so fast. There are questions.
Oh, cool. Okay.
We have a curious group. I pasted in, so I've been telling people if they want to get copies of this handout, they need to Venmo me $10, and then no. Or I've been pasting your contact information. How about that? And telling them to reach out to you.
Okay, that sounds good.
Several times.
Okay.
There's a question, are you in Campbell in California? I didn't know there was another Campbell, but the answer to that is yes.
Yes.
Right. I already know that. But can you bank statements for self-employed 1 year? I think the question is, do you do bank statement loans?
Not at this time. We do have a someone that's coming on board at Golden One that's going to help head up our product development department, basically to work on some more offerings. I'm excited for us to get VA, maybe even be able to do some down payment assistance programs and things like that. Potentially a bank statement loans coming, but those are very, very high risk. And usually if your client's going to need that kind of loan, they're going to pay a lot higher interest rates. So at the same time, let me take a look at it first. And maybe they don't need a bank statement loan. Maybe we can go full doc, things like that. We do offer higher ratios than traditional lenders with compensating factors.
Okay. So Richard wants to know, what can a realtor ask the lender when thinking of accepting an offer? Are we allowed to ask questions? Could you go over what we can ask? By the way, the residential purchase agreement used in California says that the listing agent and the seller have the right to reach out to the loan agent and ask questions. I'll share that. What questions would you ask, Jody?
So a lot of times when listing agents call me, they'll ask me, they want to know the FICO score. I can't give that to them. It's not allowed, and I'm not ever going to give that to them. If the borrower wants to give that to them, they're more than happy to. It can't come from me. So basically, just think about any kind of, private information that you wouldn't want shared to just the general anybody. That's basically what I can't share. I cannot tell someone what the buyer's income is. I can't tell them how much money they have. I can't tell them FICO scores. I can't tell them ratios. But what I can say is, just like my letter says, that credit, income, assets have been reviewed and are acceptable and sufficient for the loan. And I continue to stress that in my call with a listing agent, that they have more than enough in reserves, their ratios are low, their FICO is high. I have no concern with them closing this loan. That's basically what I can say to them.
Okay. Nicole is wanting to make sure that your email is correct, which is jhatano@golden1.com.
Golden and the number 1.com.
Yeah, I pasted it in a few times.
Okay.
Yeah, Lily would like to to see the slide of the visa types, and then there's a related question with about I-10 numbers. Can you work with those?
There's the visa status for you. Not at this time, I-10, no. There are some lenders out there that will do it, but it's really high interest rate. And if you were at the, either at the meeting last Thursday or online with Nora, she talked about that. And even at Freddie Mac, they don't have that offering yet. I know Fannie Mae does not have that offering yet because there's really no way to establish history of someone, even being able to make the payment, or just to be able for Freddie or Fannie to even have guidelines for those types. I think that probably at some point we'll get there, but not at this time.
Okay. There's are DUs illegal? The DU statement states that all the FICO and income of the buyer. I guess what the question is, for those of you who don't, do you desktop underwriting, that if that is shared with the listing? I have seen those coming through with proof of funds and pre-approval letters. But
I think you'll be hard pressed to find a loan officer that will send it out to a listing agent. I will never do that. I recently had someone ask me for that, and I said no, and then I got a tongue lashing about maybe I don't know what I'm doing and how long have I been doing this. DU report is an internal underwriting system that, well, the report is the report of the underwriting system, automated underwriting, and it does have all of the personal private information of the borrower, and so a loan officer cannot share that. This particular person said that they share it all the time, and I said, well, you go right ahead, you can share it if you'd like, but you're putting your client at risk and sharing stuff that you're not supposed to share. But if that's how you do it, then you do it, but I'm not going to do that. Now, if a listing agent is pushing really hard for it, which I don't know why they would, the approval letters that I send out, it already is saying that we have underwriting approval. But if they are, then and the borrower wants them to have it, then I'm more than happy to send the DU report directly to the borrower. They can by all means do whatever they want with it. They can make s'mores with it. They can post it on Facebook. They can tweet it, and they can send it to listing agents. But just cannot come directly from me.
Thank you. Do you service your loans or sell them on the secondary market?
We service them. We have a servicer that we use, and we portfolio most of our loans, especially jumbo loans. We portfolio for sure and don't sell those.
How many, when someone gets pre-approved, how many points does it bring down their credit score?
So that's a very good question, and it's a question I get asked a lot. So basically, when someone wants to get pre-approved and I pull their credit, they've got about 30 days that they can shop around different lenders if they want. They don't necessarily need to get pre-approved with 5 or 6 different lenders, but if they want to get rate quotes and a lender won't give them a rate quote without a credit pull, and some of them won't, then they can have their credit pulled for mortgage purpose, right? Not credit cards, not auto loans or anything like that, but for mortgage purpose, and their scores aren't affected. So basically for 30 days, any mortgage lender that pulls their report is going to get the same score. After 30 days, yeah, it's probably going to go down 5, 6, 7 points, not anything drastic, but if you're on the verge of qualifying or not qualifying, then you definitely don't want to have your credit pulled a lot after that 30-day period, basically.
So there's I couldn't see the detail on the slide. This is the H1, the Visa. I assume H1 Visa borrower can get a loan from Golden One?
Yes.
What if they lose their job after they buy a home? Well,
what if they leave their job after they buy a home?
Lose it. Can't
Is that the question?
Yes. What if they lose their job after they buy a home?
Oh my God, well, hopefully that never happens, but it does happen. Lenders don't go back after closing and audit or drive by or anything like that. Anything can happen after closing. Basically what we're doing when we underwrite a file and approve funding and everything is we're saying that to the best of our ability, we have verified that this person as of this date is eligible for this loan. We can never predict what's going to happen in the future.
Right, they're not going to, as long as the person can keep making the payments, nothing's going to happen. That's my on that. There was a hard or soft pull question, which I think you answered.
Actually, I can give a little bit more detail to that because I get that question a lot too. It's a hard pull at the very beginning. All 3 bureaus, Equifax, TransUnion, Experian. It's always a hard pull. Tri-merge report. Right before closing, we pull a gap report. It's a soft pull, so it doesn't even show up as an inquiry. Of course, it does not affect the credit report, or I'm sorry, credit scores. It's a soft pull, and we do that because we have to verify that between the first time we pulled credit and closing, nothing negative has happened. They haven't filed bankruptcy, they haven't foreclosed on anything. This does happen sometimes that people will max out their credit cards during the process, and I always say, please don't spend any money right now. Don't spend any money at all. Don't use your credit cards, especially if it's someone with a really tight ratio. And that does happen where people will still go out and max out their credit cards or increase the balance. It happened recently, 2 months ago, and the person maxed out a credit card. They ended up having to pay it off to qualify because the monthly payment on that credit card went up like 3 times what it normally was, and it put the ratios over. So just definitely don't do any shopping, but that's why we do a soft pull, is because we have to verify that everything is still this, and they're still in good financial shape. Our credit reports are good for 4 months, so a lot can happen in 4 months. But that's okay. When you refer someone to me, I stay in touch with them through that whole time, so I won't, let them drop off. But there is definitely a soft pull that's done right before closing.
So there's a question about whether or not Golden One will pay the real estate agent a referral fee when escrow closes.
No.
Can I?
No, we're not allowed to do that.
So you
can't pay a referral fee to an agent.
Right. If any of you have, studied for the real estate exam recently, there's a law called RESPA, and it's a crime under RESPA if it's a 1 to 4 unit residential property, for a real estate agent to get a referral fee from a lender, from a title company, an escrow company, from a termite company, an inspector, a home warranty company, or any, essentially, if you're a real estate agent, you cannot get a referral fee except from other real estate agents.
Mhm.
And even then, that needs to be disclosed. So that's the only referral fee you're legally allowed to get.
Right.
Also, you need to be paid by your broker. And there's currently, I know of a case where somebody's in the process of having the Department of Real Estate try to take away their license because they had Venmo'd another real estate agent some money. And for some reason, this fell apart and the DRE heard about it. The Business and Professions Code says that you can only be paid by your broker. And of course, Venmoing from a client or anybody else is not being paid by the broker. And that's something the Department of Real Estate takes very seriously. And the
Mhm.
Department of Real Estate has said that they consider that real estate agents that violate RESPA, that is a violation of a law such that the Department of Real Estate could revoke your license in addition to all of the other problems you have with violating a federal law. Other than that, there's very little downside. When a buyer just starts shopping for a loan, shall they just ask for a pre-qualification, not pre-approval?
Pre-qualification is okay, but to me, it's not worth the paper it's printed on. I mean, it's pre-qualification is basically someone tells me their information. They say, well, I make $250,000 a year. My FICO is 800, and I've got, $400,000 in the bank. Give me a pre-qual letter. I'm not going to do that. It sets everyone up for failure because, believe it or not, a lot of times people don't know what they make. They either make a lot less than they think, or they make, I've had instances where people make more. So for me, it's best to pull a full application. Look, I know people complain about getting their credit pulled and all of that, but this is one of the times where you should have your credit pulled. Okay, maybe not at Target to get a Target card or at Best Buy, but when you're going to shop for a mortgage and for a home, this is an important piece. If it's not one of the most important pieces of it. So it is a hard pull, but again, it's good for 4 months. So don't have to re-pull it again for 4 months. After about 90 days or so, their credit score rebounds and it goes right back up. But people are very particular about that, and I get it. I do, but it is very important that a lender takes a look at the full file, credit, income, and assets, because when that letter gets given to you by the buyer, your client, you don't want to go out there and write a contract, go under contract, spend 3 weeks under contracts, appraisals, inspections, all that stuff, and then find out that, oh, their credit wasn't 800, it was 580. Those things don't just magically, repair themselves. So it's best, I find, that we go ahead and go through the full process up front. It just makes for a lot smoother transaction for you, and gives a lot more confidence when we have an approval letter, not just pre-qualification.
And from the point of view of a listing agent, right, you can kind of tell whether or not the letter that you're getting is a pre-approval or pre-qualification letter simply by the wording.
Mm-hmm.
And sometimes they're really obvious. If it's like, one short paragraph and it doesn't talk about any conditions or other things that are needed to be met, then it's obviously not a pre-approval letter, it's a pre-qualification letter, which
Right.
We used to do this thing where, if I did this in a class once where we took the name of somebody's dog and we went onto one of the websites and filled out a form, and, bang, we got a pre-approval letter. I mean, pre-qualification letter right then in there, something that you could download. And
Mm-hmm.
so if you're a listing agent and there's multiple offers, because I've been in this position and you're looking, and by the way, if the loan agent is also the real estate agent, right? In my mind, as a listing agent, I put that way down at the bottom because I realize that loan agent / real estate agent is very likely to be willing to lie on a pre-qualification letter. And so the quality of the lender, right? Like Golden One is a real lender, right? And they don't let Jody just write letters because she feels like it for people. I would assume that they would get snippy if they found out you were doing that. But there are other lenders that would write a letter no matter what without checking anything, and that doesn't look as good to the listing agent. Kurt wants to know, is the 4-month time frame the same for all lenders?
I couldn't answer. I don't know. I would imagine it's pretty similar because credit reports, like the dates on them when they expire and stuff, it typically is based off Fannie Mae guidelines, but you might have a lender that wants to repull every 90 days. Lenders can make their rules more strict than Fannie Mae. They can't make it more lenient. So you won't have a lender that says, well, if Fannie Mae is 120 days, I'm going to say 160. You won't find that. But I would imagine about 120 days or so is pretty standard.
What are some good questions a real estate agent should be asking a loan officer about buyer's qualifications? First of all, let me just say, I always like to know that the loan agent knows who the buyer is. When they say, who? What? But anyhow, go ahead.
No, these are all great questions. I'm so glad you guys are asking these. So we read that again, Mike. I just want to make sure I'm understanding.
So the question is like if I get a pre-approval letter and I'm calling the loan agent because we want to do our due diligence if we're a listing agent, you would want to be sure that the loan agent knows who the borrower is. And I would ask, what have you done as a loan agent? Have you verified assets? Have you verified, what have you looked at that? What have you done and get that? Yes, but what else?
Yes. Yes. So, I will say things like, okay. So what you would ask is, I'm assuming you'd be the listing agent, have you reviewed their pay stubs and W-2s? And then I would say, yes, I have. And I'll say something like, if it's someone who's, got base employment income and that's it, no RSUs, restricted stock units, no commission, nothing like that. I usually will say their income is it's a very basic type of income. I see no problems at all with it. If they're self-employed, I won't say they're self-employed, but I'll say I have already had their full income documentation package underwritten. I'll say I've had their tax returns underwritten, all of that. It's all done. And we have verified income to the penny. I'll say things like that to answer questions. I can be as detailed as I can be without giving, out the information that I'm not supposed to give out. But asking those kind of questions is always great. I kind of giggled just then, Mike, when you said for me to know who the buyer is. I had about 3 months ago a borrower under contract, and then about 2 weeks during the process, I get a call from a listing agent asking about this buyer's offer they just submitted. And I was like, I'm sorry, what was the name again? And they told me, and I said, are you sure that they're offering on your property? I think they're already under contract. Well, they never told me that they were canceling the current contract. They still had it going. It hadn't been canceled yet. They never told me that they were canceling it. Basically, they ended up finding another house they liked better, and they didn't know how to get out of the one contract, and they were already offering on another. They didn't tell me any of this. So I was completely caught off guard at 8:30 a.m. on a Saturday morning. And the listing agent, what was I supposed to say? I was honest. I said, I'm sorry, I didn't know they were offering on another home. They're under contract on another house, and I didn't know that they were doing this. Well, she said, I'm not taking, their offer was better than the next one that she was going to go to, but she wouldn't take this because she said, well, they already seem shaky. And in my mind, I was like, yeah, you're right. I need to call them and find out what's going on. They did not communicate with me at all, anything that they were doing. So that's a one-off though. So I wouldn't even address this like, oh, you guys need to make sure, because for the most part, I'd say 99% of the time, agents do a very good job of keeping, at least mine do a good job of keeping me updated. But it does happen from time to time. And I felt really bad for them, but I called them and I said, you have to tell me these things. This is a big deal. anyway, that was kind of weird. But yeah, I mean, I will tell as much as I can to a listing agent. I want to be a helpful part of the process, and anything I can do to help, our mutual client get the contract, I'm going to do, as long as I stay in compliance myself. Remember, loan officers are much more heavily regulated than you guys. And we can turn around and get in trouble for something we had no idea we could, get in trouble for. So I just try to keep my nose clean and make sure that I'm not sharing anything I'm not supposed to. But I also, will definitely encourage the listing agent to take the contract, because there's really no other reason it wouldn't work unless there was something wrong with the property, or something like that.
Yeah. And so Richard likes to say not only is your word, but your pre-approval is golden.
I love
Thank
it. It is.
Yeah.
And we could even take it a step to say your approval is golden, especially if it's already underwritten.
Okay.
I love it. Thanks, Richard.
All right. Golden one, yes. So we're coming up to the end of our allotted time. For those of you that I'm working with, which means you're on my team or part of my group, I put together some very specific marketing materials that you can use to get buyer leads, including a ebook on down payment assistance programs, how they work, how to get more information about them, which is something I'm probably going to do next Tuesday. And then I plan on scheduling something with Jody, even if you guys don't. So you better get on it. And if you want copies of the handouts or to make an appointment to set up a home buying fair, reach out to Jody. I pasted her information in several times. Otherwise, thank you very much, Jody. Always a pleasure.
Thank you. Oh, same. Thank you so much.
All right. Have a good day, everyone.
Bye.
Bye.